I've invested thousands into all sorts of things. You did the hard work and got $1,000. Let's talk about where to put it to maximize its potential. In this video, you'll get 5 fundamentals. All of these are things that a beginner should know, and even people who've been investing for a while should revisit, because if you internalize them, you're more likely to be a successful investor. You'll get 6 options on where you can invest. This is based on my research and my own personal experience, and you'll get the best way to get into the asset class without getting totally overwhelmed. And finally, you'll get 3 key indicators that predict long-term financial success based on the data we have, because some people make it and some people don't. We're going to focus on the habits and traits that lead us to success and use those to guide us. So I can't give you financial advice. I'm not qualified to do that, but I can tell you that when I was in high school, I asked my parents how much money we as a family spent in a given month. There's a lot more to this story. My parents were and still are fantastic people, but I never got an answer. So I've had to figure out how money works on my own, and I've done a ton of research because I can't afford to be wrong. You're more than welcome to learn what I've learned and from my success and mistakes. Welcome to Financial Show and Tell with me, Raj V. All right, fundamentals. First, you need to know that $1,000 is still a ton of money, even now with this huge wave of inflation making everything more expensive. In a day and age where people on the internet claim that $1 million isn't even a lot of money, 1,000 can still buy food, pay bills, and is a direct reflection of your hard work, and you should be proud of that. A long time ago, I operated a vending machine, and I remember when I first turned a profit, which was a few $100s at the end of one summer. That was only possible because of all the trips to Sam's Clubs, all the cuts to my fingers from opening the packaging, and maybe getting my fingers stuck in the machine once or twice. Don't tell my mom, she worries about me. I have all 10 of them still, I'm good. Now, I admit, it wasn't the hardest job in the world, but it's how I made money back then, and today I have a job, which is my largest source of income by far. Which leads me to fundamental number 2. Investing money means being willing to put that money that you worked hard for at risk for the potential to grow the money. So please know, I can almost guarantee you, you will lose money when you invest at some point in time. When I lost money, it wasn't a fun experience. I called it market tuition. I learned and I moved on. Risk is part of investing. The good news is that it can be managed. If you have a long enough time frame and the world doesn't have too many major shifts, the data says you'll be okay if you're in the right assets. And speaking of the right assets, fundamental number 3, generally the riskier the investment, the higher the potential for profit, but there is a higher chance of losing money. So you can take higher risks, which might be encouraged if you're younger, because the idea is you can make up the losses back because you have time on your side, but you do miss out on the compounding effect of less risky, stable, but proven long-term investments. Of course, if you take high risks, you could accelerate your financial journey, but remember, it's always good to only invest what you're willing to lose and have an exit strategy to lock in profits, especially when you're in more risky investments. Now, I know all of that sounded very middle of the road and not decisive at all, but that leads me to fundamental number 4. You cannot apply information that is designed for a massive amount of people to you as an individual. That makes no sense. That includes all of the information in my videos too. You have to remember that what works for one person or most people may not work for you. There is no best answer. It all depends on your own circumstances. Not a single person knows the future. Otherwise, we would have sold everything we owned and bought NVIDIA 2 years ago. We're all just taking the information day by day and making the most of what we have. So you have to be your own filter, and the clearer you are with your own goals and how you're going to get there, that makes it easier to get and use the right information when you need it and say no thanks to the rest of it. So for me, I don't invest in individual stocks right now, so I don't find single stock information very valuable for me personally right now. In the future, sure, but I'm building my dividend portfolio's foundation, and I don't want to tie to the performance of just a few companies. I have a whole video on why I sold my stocks. Check it out later if you're interested. But one of the most overlooked things in life, fundamental number 5, most things we want take time. If someone is promising you a get-rich-quick opportunity, or just generally if it sounds too good to be true, it is. This is especially common in the later phases of a bull market when greed is the predominant force driving price action, not fundamentals, but it can happen at any time. And even if you did end up getting rich quick, there's a danger to that. The faster you get money, the quicker you lose it. There's a lottery statistic that says a huge majority of lotto winners end up broke and worse off than before they even won. So you have to get your head right before you can get your wallet right, and then keep it that way. Acquiring wealth requires knowing yourself. All right, that was heavy, so let's do a quick recap. Money is still money and it still has value. Losing money is part of the game. No risk, no reward. High risk, high reward. Low risk, low reward. But that's not a bad thing, especially if you're planning for the long term. Know what you want, make a plan how to get there, be your own filter, take what you need, leave the rest, and of course, give it time. So first off, if I was just starting, I would put $1,000 into this because it's like the financial equivalent of your seatbelts and airbags in your card. You hope you never need it, but when you do, it literally saves you. I'm referring to a savings account, preferably one with a high interest rate. Shouldn't be too hard these days, but know that interest rates on savings accounts will come down as the Federal Reserve starts to lower their rates. I know this one is super boring, and I know nobody saves their way to multiple millions of dollars, but the importance of a savings account is incredibly underrated and is a requirement, in my opinion, to actually making money. I went to school for 20 years. Then 6 months after graduating in 2020, I was filing for unemployment because my job in a super safe, stable, secure field told me I can't go to work due to lockdowns, and we have no idea how long it'll be until we can bring you back in. Funny enough, I got very little financial education all that time I was studying. Fortunately, I learned some things and didn't buy a shiny, overpriced new sports car right out of school, and instead I saved my money and I was able to dip into my savings to pay my bills and eat until things normalized. Building my emergency fund as soon as I could was one of the smartest things I ever did. Now, speaking of smart investments, the goal isn't to just invest $1,000. It's to invest the most amount of money we possibly can, because the more money we invest, the more we can make, the more risks we can take without losing it all, and the best way to make more money brings us to option number 2 on where to invest: ourselves, our skills, our education, aka you and me. I know, another boring one, but this is arguably the most valuable place you could put your money. First, when I'm sick, the only thing I want to be is healthy. When I lived in Philadelphia, I was on my feet all the time, so much that I developed plantar fasciitis, so it literally hurt to walk. I bought the right shoes and magically, problem solved. I no longer had to deal with pain all the time, which made me way happier. I had more energy, I could physically do more. That's all great for life in general and makes it more likely someone would make more money. You can apply this to shoes, mattresses, pillows, your healthcare. Anything that makes you healthier and prevents you from getting sick falls in this category. Now, for skills and education, this could be literally anything. I'm curious to know, what was the investment you made in yourself that allowed you to do more? Let me know in the comment section. For me, my most significant investment recently was this YouTube channel. In order to make one of these videos, I have to have an idea, make a title, create a thumbnail, then I research the idea, write a script, film it, edit it, and post it. Each part of the creation process requires separate but very important skills that, when combined, create videos for people to watch. So I learned how to do all that for $0, but I will admit it took a lot of time, which is a very expensive way of investing, but I'm fine with that because time is going to pass anyway. I'm just going to live with the consequences of what I do and what I don't do. So since I was going to do the research anyway, I might as well buy a camera, buy lights, buy software, and make videos while I'm doing the research. Now, I get it, not everyone wants to spend hours after work and on the weekends making YouTube videos. Let's say you already have your savings account, let's say you already have your skills, you want to figure out how to make your money truly work for you. So our next option, which is way more accessible for people now than ever before, is the stock market. Now, this is one of the easiest and most difficult places to invest. That's a good and bad thing. You can find low risk, medium risk, and high risk investments on an app on your phone. You can diversify, you can narrow down, and with options trading and commodities, you can make and lose money in all sorts of economic environments, sometimes even after the markets close. It was really easy to get chopped up in the markets. I bought my first stock on Robinhood in 2016. Long story short, I didn't know what I was doing. I didn't have a long-term goal or plan to get there. I just saw a high-yield investment, liked the idea of getting paid every month for just having my money in a stock. And then when the stock went down, even just a little bit, I got impatient and sold for a loss. If I were a beginner, I'd look into VOO or VTI. These are funds that allow investors to own the top 500 companies in the US or all the publicly traded companies in the US. And the 30-year track record for both of these is incredible from a returns perspective. It's so hard to beat. Even hedge funds, these are people who get paid to invest, rarely beat it in the long term. If you're a dividend investor like myself, where you buy stocks and get paid for owning the company, SCHD would be a great place to look into as well. I have a full video on that. But there's a lot more to the stock market. Definitely worth an entire video for. So I'm planning on making a stock market for beginners video. So if you're interested, be sure to subscribe and turn on notifications. That way you know when it's up. Now, you've probably heard about this next investment because it's made a ton of people millionaires, and some of them are really good at marketing. Real estate, which refers to physical properties like rental homes and commercial properties. Then there's REITs, which are stocks that you buy in the stock market, which then let you invest and not necessarily take ownership of the property, but rather the company that manages these properties. Some of them pay dividends. One in particular, Realty Income, pays a monthly dividend. Then there's crowdfunding real estate. You give your money to a platform and they buy properties and manage them. You get a payment. For a beginner, if all your ducks are in a row financially, I would say learn before you jump in. There's a lot of people who are buying property, flipping homes, making YouTube videos. It's so easy to learn from their experience. But remember, prices and interest rates are way higher than a few years ago. So getting into a property today is going to require way more upfront capital. So if you're just starting with $1,000 and really want to get into real estate, consider REITs and crowdfunding to diversify your portfolio while you're building up to the point where you're ready and have enough money to buy a property of your own. Now remember, crowdfunding is new and has its risks. The crowdfunding platform goes under, they probably take your money with it, so be advised, read the fine print. Now some of you have heard that a new asset class has been developed, and the financial gains here are unheard of in any other investment type with minimal amounts of capital required to get started. Of course, this means cryptocurrency. To be clear, the number one use case right now for crypto is speculation. Some coins are trying to get positioned to solve major problems. Most are scams or memes tied to money or startups that will fail, because that's just the nature of the beast. So if you want to hedge against government currency debasement, Bitcoin might be an answer for you. Maybe check out gold and silver too and weigh your options. If you want to make a ton of money, or more likely lose money, the lower on the market cap list, the higher risk, but the higher reward. If you want to invest $1,000 in crypto, consider it gone immediately. Almost everyone in crypto loses money in some way. For me, I lost money buying high and selling low in the 2017 cycle, eventually made money buying low and selling high last cycle, but I also lost a bunch of money taking unnecessary risks at the end of the bull market. So for beginners, crypto is not the way to go unless you want to learn painful financial lessons the fast and hard way. Think of Bitcoin as a hedge. Everything else is speculation until the asset class develops further. Crypto deserves its own video entirely. There's so many narratives, meme coins, AI coins, utility coins. You can trade crypto, you can buy and hold, but to be honest, there isn't a lot of interest at the moment. Maybe I'll make a video in the future. If you want it, let me know. Now, one more option that I think is truly one of the most underappreciated in the marketplace is a business. This can be as small as a one lawnmower operation in your neighborhood, again, referencing skills and knowledge we talked about before, or you could consider a platform like WeFunder that lets the little guy, retail investors, fund startups just like the super wealthy. I personally did this a few years ago. I could only invest so much money given the laws regulating this, so read the fine print before you jump in. There might be a maximum amount you can invest in based on your income. There is high risk here, but you could find a unicorn. From my experience, 3 of the companies I invested in dissolved and are no longer around, so I lost money. One of the companies still exists, but I've basically been ghosted, so I'm not banking on that anytime soon. And the other one is still around, growing. I get investor updates every few months, and it will hopefully turn into something really big one day. I'm not able to say too much because I've signed contracts, but this style of investing is an option, and you can take some risk here if you want to. All right, that was a lot. Let's recap. Savings account, safety first. Skills pay bills. The more you know and do, the more you earn. Stock market can be as risky or as stable as you want it to be. Real estate, you might have to work up to your own properties, but you can get started through a number of different ways today. Just know the risks involved. Crypto, high risk, speculative, you've been warned. Businesses, high risk, high reward. So if I could go back in time and do it all over again, I would first fill my savings account, then invest in my skills, then build a baseline, super boring portfolio in the stock market based on large cap US stocks, then focus on more income generation, paying off debt, then branch out from there into other investments. That's just me knowing what I know now. Let me know what your plans are. And if you're finding this video valuable, please tap that like button. It lets YouTube and myself know to give you more content like this in the future. Okay, so all this information is great, but none of it matters if we don't actually do the right things. What does science say predicts financial success? Turns out a lot, but I'll give you 3 of the most relevant articles I found. So Dan Goleman, the father of emotional intelligence, has data spanning 30 years. They kept up with kids from New Zealand who grew up, and they looked at how successful financially they were. The study determined that self-awareness, which is the least visible of the 4 models of emotional intelligence, is the most important in determining future financial success. Now, this is particularly interesting because remember when I said acquiring wealth requires knowing yourself? I didn't pick that up from this research. I said that because one day I decided what I wanted my finances to look like in the future, and I made a plan to get there, and eventually I started seeing results. This research and my experience combined say that being self-aware, or knowing yourself, how you operate, and why you do the things you do, is a predictor of financial success. Now onto another study, a rather famous one, the Sanford marshmallow experiment. Basically, researchers took kids and sat them in a room by themselves and said, here's a marshmallow. You can have it now, or if you wait until we come back, you can get another one. Some time goes by, some kids eat the treat, some kids waited and got 2. Long story short, the kids who waited and got 2 did a much better job of waiting by basically distracting themselves instead of thinking about the second marshmallow. And from my own experience, once I stopped chasing the shiny object, that's huge lump sum wins in the marketplace, made my plan, chose my investments, and consistently started investing, my portfolio magically started doing better. And number 3 comes from Dave Ramsey's survey of 10,000 millionaires. Lots of data from this source, but one interesting finding is the fact that the top 5 careers for millionaires surveyed were engineers, engineer, accountant, teacher, managers, and attorneys. All careers that rewarded sticking to systems and clear guidelines, like a lesson plan, the tax code, or the law. So what do we take away from all these findings combined? If we know ourselves well enough to know what we want, make a plan to get there, create systems that allow us to do the little things necessary, like invest in the right assets, and make it effortless so we don't even have to think about it, and we follow the system, we'll get to the destination. My plan for the moment does not involve single stocks, and since most investors can't beat the S&P 500 on a long-term basis, I decided to sell all of them, and I explain why in this video here. See you over there.